the trade war just flipped. Just weeks ago, the U.S. hit China with tariffs as high as 145%. Now, the White House is considering slashing those tariffs in half. China's economy is feeling the heat, and while that battle rages, India is quietly stepping into the spotlight, striking new deals with the U.S. This isn't just a shift in numbers, it's a shift in power. In this video, we're breaking down what's really happening behind the headlines, why Trump may cut tariffs, how China's export machine is slowing down, and what India's rise means for global trade. And stick around till the end, because we're revealing what smart businesses and investors should be doing right now to get ahead of the next global trade shift. Welcome to Smart Money Vids, where we turn headlines into real-world insights for entrepreneurs, investors, and forward thinkers. For the last 2 years, the U.S. has taken a hardline approach on China, raising tariffs to historic levels, with some goods facing duties of up to 145%. But now, there's a shift underway. According to multiple reports, the White House is weighing a major tariff reduction, potentially bringing rates down to between 50 and 65%. That would mark the biggest rollback since the trade war began. So why the change? Pressure is building on all sides. U.S. retailers are warning that prolonged tariffs are driving up costs, squeezing profit margins, and hurting consumers. Wall Street is watching closely too. Markets rallied the moment news of a possible tariff cut broke. Even Trump, who championed the 145% tariff strategy, now says those levels are too high and that they will come down, though he insists they won't go to zero. Behind the scenes, sources say the administration is exploring a tiered system. Non-critical goods, like clothing and furniture, might see the steepest cuts, while tariffs on strategic items like semiconductors and electric vehicles would stay higher to maintain leverage. In short, this isn't a surrender, it's a recalibration, a strategic move to ease domestic pressure, boost the economy, and open the door to possible trade talks with China on U.S. terms. While the U.S. considers cutting tariffs, China's economy is showing signs of real strain. In March, Chinese exports jumped by over 12%, but that surge wasn't a recovery. It was a scramble. U.S. buyers were rushing to place orders before new tariffs kicked in. Economists call it front-loading, and it usually means trouble is just around the corner. Factories in China are already feeling the slowdown. The latest data shows manufacturing activity barely holding above growth levels. Some sectors, like auto parts and consumer electronics, are seeing overseas orders dry up almost entirely. At the same time, domestic demand inside China is soft. Retail sales are flat, unemployment is rising among younger workers, and inflation has been hovering near zero. That's prompted Beijing to launch new stimulus programs, including cash incentives for car and appliance buyers and more funding for infrastructure. But here's the bigger picture. China's export-driven model is starting to crack. The trade war isn't just costing China sales, it's pushing global companies to shift supply chains to other countries, and that's a long-term challenge Beijing can't ignore. All of this puts pressure on Chinese leadership. They've been careful not to appear desperate, but behind closed doors, there are signs they're preparing for negotiations. One major clue? They just replaced their top trade negotiator with someone known for dealing with the World Trade Organization. It's not a guarantee that China will come to the table, but if the U.S. lowers tariffs and the pressure continues to build, a deal could be closer than most people think. As the U.S. China trade war reaches a standstill, another country is moving into position: India. Just days ago, U.S. Vice President J.D. Vance confirmed that the U.S. and India have finalized the framework for a formal trade agreement. The deal covers a wide range of sectors, from food and automobiles to online retail, and marks a major step toward a deeper economic partnership between the two countries. This move is strategic. India was one of the countries that President Trump granted a 90-day pause on new tariffs, something he didn't extend to China. While China faces increasing pressure, India is seizing the moment. With its expanding manufacturing base and strong diplomatic ties, it's being sought after not just by the U.S., but by global companies looking to rewire their supply chains. For India, this isn't just about more exports. It's about stepping onto the world stage as a serious economic power. And for the U.S., it's a signal. The future of global trade may not revolve around China alone. So, what does all of this mean if you're a business owner, an importer, or even just someone trying to stay ahead in a shifting global economy? First, if you rely on imported goods, especially from China, you need to start thinking 2 steps ahead. A tariff rollback could open the door to more affordable Chinese products again. But depending on what category you're in, that window might not stay open for long. This is a moment to reevaluate your supply chain. If you shifted away from China due to high tariffs, it might be worth revisiting those numbers. But keep your options open. India is becoming an increasingly attractive alternative, and some companies are already locking in new vendor relationships there. Second, if you're in wholesale, retail, or e-commerce, watch how pricing changes over the next few months. A drop in tariffs could affect your competitors' costs, and that means pricing power might shift fast. You don't want to be caught flat-footed. And third, for investors, this is the time to pay attention to trade-sensitive sectors. Logistics, semiconductors, agriculture, even industrials. If a new U.S.-India agreement takes off, or if U.S. China tariffs truly come down, these sectors could see major movement. This isn't just a policy update, it's a realignment of who the U.S. does business with. And that's going to create winners and losers. Smart players are already adjusting. The trade war may not be over, but something has definitely changed. The U.S. is signaling a new direction, China is feeling the pressure, and India is stepping into the vacuum. Whether you're an importer, an entrepreneur, or just trying to make sense of the global economy, this shift matters. Because when trade routes change, so do opportunities. If you're not paying attention to where the world is going, you risk getting left behind. At Smart Money Vids, we're all about turning knowledge into action. Check the description for helpful tools and subscribe for more life-changing insights. Thanks for watching, and we'll see you in the next video.